This is the Scrap Metal and Commodities Recycling Report brought to you by BENLEE Roll-Off and Open-Top Trailers and Raleigh Goldsboro Metal Recycling, January 25, 2016. In this report, last week, there was enormous volatility in global stock market and commodity prices, with copper hitting new almost 7-year lows. Oil hit new major lows last week as well, resulting in this morning OPEC cried uncle and said it's time to cut global oil production. Looking at the bottom left of this chart, we see rather significant increases in U.S. steel production in the past few weeks to multi-month highs. Oil, which hit new almost 13-year lows last week, popped up more than 10% on Friday, but is down this morning. Incredibly low oil prices have the U.S. oil rig count at the lowest level since April 2010, almost 6 years ago, so steel using these rigs remains depressed. The oil rig count is now down about 70% from the high of about 15 months ago. Scrap ferrous prices have come up a bit as we reported last week, but no one sees this as a major trend up. Hot rolled finished steel is up a bit as well, which is expected with scrap prices up. Prices should remain low in 2016 though due to oversupply. As an example, Rio Tinto, the world's third largest miner, announced last week that despite low iron ore prices, they will increase iron ore output about 3% in 2016. Stainless steel scrap prices have stayed a bit higher than they have been as well, but they are too near multi-year lows. Copper hit yet new almost 7-year lows like oil and came up a bit at the end of the week. But the 5-year chart really shows we remain near 7-year lows. Aluminum prices remained stable last week, but major cuts in aluminum production are having an effect to stabilize prices. But in reality, when looking at the 5-year chart, we see like aluminum, copper and aluminum together are both near the 7-year lows. Last week we learned of 2 newly closed scrapyards in North Carolina, and the company's North Carolina shredder has been shut down for months for maintenance. We also heard of a Michigan shredder recently shut down and sold. It'll be set up on Long Island, New York. There remains no good news on the global economy. Living out the crash of 2008, China's GDP growth rate hit a new approximate 15-year low. China's diesel fuel demand has been dropping year over year for the last 4 months, which is another sign of China's slowing economy. This chart of the Baltic Dry Index shows the price to ship cargo containers around the world. The global slowdown has resulted in shipping costs being the lowest in over 30 years. Related, George Soros, one of the world's richest global executives, warned that China's economy could have a hard landing. If that happens, it will lead to continued low commodity prices and volumes. Jobless claims in the U.S. came up a bit in the recent weeks, but remain well below what they were only a few years ago. So that's good news. On a continued major positive, oil prices hit major new lows last week, as we said, which remains a major positive for large amounts of the global economy. Lastly, on another positive, Iran, now back in the global economy, announced billions of dollars of purchases of Airbus jets and GE power plants in just the last 48 hours. With that, we hope all have a safe and profitable week. My name is Greg Brown.